or flexible. Those words are talking about the funding or how it is getting paid for. Then there are two words that describe the payout of an annuity and when that payout is going to begin. And those words are either immediate or deferred. And here's your definitions for each one. If it is an immediate annuity, that means that the payments start usually within the first year of purchase. So the payout or the income that it starts providing is usually within the first year of purchase. So that's all the word immediate means. The other word about the paying out or when the income is going to start is deferred. All deferred means is the payout starts sometime after the first year of purchase. Could be 20 years down the line. Once again, that's all those words mean on the payout is when it's going to begin. All right, real quick, talk about variable annuities. You might have one question over variable annuities, so I really don't want you to get too caught up in it here. But with a variable annuity, all the words that we talked about earlier are still the same with variable annuities, just like variable life insurance. So let me recap those so you can once again hear it again and memorize the words. Remember, with variable, you have to have your life license and a securities license. That securities license is registered with FINRA, formerly called the NASDAQ, and the oversight is the SEC. You, as the insured, are going to get to pick the underlying investment of bonds, stocks, or real estate. Since you get to pick it, that means there's no guarantees of a return, so no guarantee of cash value. We know the funds are kept in a separate account, not in the insurance company's general account, and we know it serves as a hedge against inflation. Okay, so all of those words are variable specific. Now with a variable annuity, when you put money into it, it's like putting money into a mutual fund where you get shares of a mutual fund, but here they're not called shares, they're called units. During the accumulation phase, they're called accumulation units. So you put in, you know, the amount of money going in every month. However, the number of units you're accumulating is not going to be known each month. Once you annuitize during the annuitization period, then they are called annuity units. Now here, you're going to know the number of